what if I told you most people lose money in the stock market not because it's risky, but because they don't follow simple rules? In the next few minutes, I'll show you how to avoid those mistakes. Hi everyone, welcome back. Today, we're talking about the golden rules of stock investing in the US market, explained in a simple way with real historical examples. If you're a beginner, this video can change how you think about investing. Rule number 1. Think long-term. The market goes up and down every day, but over time it grows. For example, during the 2008 financial crisis, the market dropped heavily, but investors who stayed patient saw it recover and grow to new highs. So remember, time in the market is more important than timing the market. Rule number 2, buy a business, not just a stock. When you invest, you're owning part of a company. Think about companies that solve real problems and keep growing. For example, Apple transformed from a struggling company into one of the most valuable companies in the world. That's the power of strong business fundamentals. Rule number 3, always do your own research. Never invest just because something is trending. Take the GameStop example. It rose quickly because of hype, then crashed. Many people lost money because they didn't understand what they were buying. So always know your investment before you invest. Rule number 4, diversify your investments. Don't put all your money into one stock. Even strong companies can fall. For example, Meta dropped significantly in 2022, but if your money was spread across multiple companies, your risk would be much lower. Rule number 5, control your emotions. The stock market tests your patience. When prices fall, people panic. When prices rise, people get greedy. During the COVID-19 crash, many investors sold in fear, but those who stayed calm saw the market recover quickly. Discipline is the key to success. Rule number 6, invest regularly. You don't need to wait for the perfect moment. Instead, invest small amounts consistently over time. This strategy helps you handle market ups and downs and build wealth steadily. Rule 7, learn from successful investors. And Rule 8, avoid get-rich-quick traps. Great investors focus on long-term growth, not quick profits. Many people chase fast money and end up losing it. Smart investing is slow, steady, and disciplined. So, let's recap. Think long-term, invest in strong companies, do your research, diversify, control your emotions, and invest regularly. Follow these rules and you'll be ahead of most investors. If you found this helpful, like the video, subscribe, and start your investing journey today.